Good day. We've got another training for a loan product review. We're going to look at low-down conventional loans, the Home Ready and the Home Possible and Home Possible Advantage. Everything you're going to want to ever find is right here on your portal, and the resources is your primary, followed by the underwrite/products. How-tos over there, and copies of this and all the other videos are in the video library, so when you need to refer back to something, you can find them right there. If we jump over to the product and underwrite section, this is where you'll find your credit policies, which in this case we'll be looking at both the, as I mentioned, the Home Ready and the Home Possible/Possible Advantage. They're in your conforming fixed down at the bottom. Right there is where you're going to see both of your credit policies. Anytime you have a unique program, I always recommend pulling the guides and having them available so that you're not missing something unique to a specific program. Just as good business to make sure you have what you need. So those are your credit policies. You'll find them there again and under the underwrite/products. So also, you'd find Fannie Mae seller guides, which are all your rules. Same with Freddie Mac guide. So, great reference. Always be prepared, and that'll help you to do that. So, the Fannie Mae and Freddie Mac low-down payment comparison. While they are very similar, they do have a few pieces. And as we look at what they really say, it's designed for credit-worthy, low to moderate income borrowers with expanded eligibility for financing homes in designated low, minority, and disaster impacted communities. That's Fannie's, and Freddie's just says financing and options to meet a variety of borrowers' needs. Be able to capitalize on opportunities to meet home financing and low and moderate income borrowers looking for low down payments and flexible sources. So really says, credit worthy, that just need the opportunity. So if we go into Freddie Mac first, Home Possible and Home Possible Advantage, you notice it's a purchase, 30-year fixed, primary residence with full documentation. The difference between Home Possible and Home Possible Advantage: Home Possible is to 95, Home Possible Advantage is to 97. If at least one of the borrowers has owned a home, you don't have to have home buyer's education. If they haven't, one of them needs to participate in an educational course. There's no first-time home buyer requirement, so if you owned a home before, not a problem, and there's no 3-year waiting period either on that. All borrowers must occupy the residence as a primary. They cannot have interest in a residential property at the time of closing. 620 is the minimum required score, and DTI is determined when you run the findings, but be sure that they're not going to go to high levels. Max contribution 3%. Reserves are determined by LPA, so and it's an LP only. You must have an accept with LP, not DU. The income limits are determined by the Freddie Mac Home Possible eligibility site. You go on there, put in the address or the area, and you'll find it. These are your normal fees that you're able to charge. Always contact your branch manager to make sure that each area has their own unique setups, so be sure to note that. The one thing that you have to do is when you're in Freddie Mac Home Possible, you have to put the Home Possible Advantage in the offering identifier, or it won't recognize it and you won't get a complete return. Fannie Mae Home Ready, again, is a purchase. They'll also do limited cash out refinances. It's a full doc that go to 95, but they will go to 105% combined loan to value. So it's an opportunity there. Secondly, it's a purchase, cash out only. Basically things that I've said. It's DU only for this program, and the reserves again will be determined by the DU findings. There is no first-time homebuyer requirements. The home buyer education on this is required on all purchase transactions. Occupancy is owner occupied only. Non-occupant co-borrowers are permitted on this program. So that's one option there. Income is determined as listed, must be followed by the area and median incomes. They've got lookup tools on Fannie Mae's website. There's your eligibility there. And for income limits, here's a step-by-step guide for using the tool. You can go right to that site right there and have your eligibility, how to do it. So pretty simple to use. Fannie Mae, again, is a 620, no traditional credit is allowed. Again, it's a DU only, no LP. It's got to run through it. You have to receive and accept. And then in the, we'll show you also in the, on the Fannie Mae's. The nice thing about both of these loans is they have a lower mortgage insurance coverage factor. Instead of being a 35%, it's a 25%. So it's saving your borrower money when they're looking at that. 1 to 4, 1 unit, 2 to 4 units also. Approved condos, existing properties, new construction. Pretty simple. Now for both of these programs, this is a great piece that there is a little insurance, if you will, that through Radian, when you're doing these programs, it'll give you a monthly benefit of $1,500 if the borrower loses their job, and they can use it up for 2 years. It's a maximum of $9,000 worth of coverage. But they have to opt in on the program once the loan's closed. So if they lost their job, they could get $1,500 a month to help pay while they're getting their job. So with when you're looking at these, if you go into to run the LP, or the DU on this one, what you're going to see is you're going to go in for you're going to submit just like normal. There's not a lot there to worry about. You go into the DU loan limit access. Right here you'll click to edit loan, and in this section here you come down to additional data, and right in there the community lending product you have to put in home ready. So you go in and you make that, then you'll submit, and it'll rerun it with the standard, just you're gonna underwrite only, and you'll get your desktop findings. So just remember, on DU Home Ready, you have to go in through DU and hit edit, and then additional information, and in the credit profile you have to hit Home Ready, and then you can hit submit. That way you're going to get the appropriate identifier for your approval. Now mine's ineligible because I'm using a test credit. So again, LP, you put it in the offering. On DU, you have to go into their site as well and hit the complete. Now when you're locking and pricing, you need to remember that you need to hit the identifier. If you're running at LP, or you're running for the Home Possible, you need to acknowledge the appropriate underwriting system. So for Home Ready, you've got to go in and acknowledge DU or LP, and then you need to acknowledge the special programs, whether it's a Freddie Mac Home Possible or a Fannie Mae Home Ready. That way it prices it appropriately, because they do have limited loan level adjustments. So you want to make sure that you're getting the appropriate there. So that's basically the two. They both have lower options for rates and loan levels, and they have expanded criteria. Check them out. They're a great option comparative to FHA. Thanks.